Let's figure out what's happening now in the markets. First off, read this disclaimer carefully, and we will just jump right into the charts now. So we have definitively seen some very substantial damage. So we start here with the S&P 500. So what is interesting is that if we go here to the daily data points, it is pretty clear that, we have seen, a very substantial pullback, and we have lost, all moving average support levels. And we are currently now right here at resistance on the 200-day moving average in red. That is a super key resistance level, and as long as we are below it, it's the level where the bears are going to put on short positions. Similar, well, inverse to what happens when we have, a bullish situation with a moving average, like let's say here the blue 100-day moving average. When it offers support, that's when bulls buy. So what is happening when a security falls below such a support level, it just is the opposite. So you start to see that shorts are put when we meet resistance, below that moving average. So yeah, so that is the setup for the S&P 500. But given how we are very, we became very oversold, it wouldn't be a huge shock to see a rally. It's just that, that is very much to be determined, because the big issue with losing that many support levels in such a quick time is that it's very difficult to get big money to enter the market. That's what becomes tricky. Okay, so here is Canada. So we have a bit of a similar-ish situation with Canada in that we have lost that 200-day moving average. The bigger issue for Canada is that the 200-day has lost significant legitimacy back here as well. So the situation for Canada is really way more messy than for the S&P. So it's in a more vulnerable position. Okay, because the big issue for investors when looking at Canada is that they see, in terms of support levels, well, they don't see much at all because it didn't really work back here. When it inspired people to enter the market, they were not rewarded at all, and now they are really stuck below that prior support level. And the 200-day has a lot of legitimacy in Canada due to the prior price action. So let's draw that in as well. So here it was a surgical short level, and here it was, almost surgical buy level. Very good for bulls, but also very good for bears when we are stuck below it. Okay, so let's just go through a bunch of different stock markets. So now we have seen some North American markets. Let's go take a trip to Mexico, and we are going to focus here a bit on daily data points. So Mexico, a very similar situation here across the board really. The 200-day moving average went from being support to becoming resistance, and we are below all the key moving averages. When we look at these other indicators, we do see that on the daily RSI, we are at a very low level that has, like, if we look back here as an example, this precise level formed this low, and it was a good time to buy. The issue for the Mexican stock market is that when you have these more aggressive sell-offs, like back here when we are like below the key moving averages, you see that we have the ability to become very oversold on RSI. So the situation in Mexico is, we are at the point where you could expect the bounce, but also a point where just a little bit more panic can push us significantly lower. So yeah, not any kind of, not like a clear bullish setup at least for Mexico. But we don't have that clear bearish setup either in Mexico, in the sense that we are currently, like, if let me just draw that in, like shorting like here makes a lot of sense because you have the 200-day moving average as resistance, so you have a very clear stop level, and anyone who went short there, they are looking at a very nice profit. The message situation for Mexico is that you have this hammer candlestick here, which is a bit of a reversal candlestick. So we could also see some rally, but it's one of those situations where it could go so much in both directions that it's messy. Because the key thing whenever you put on a position is that you want to know where do you put in your stop level. Now we go to Brazil. So when we look at a bit bigger picture on the Brazilian stock market, you can see that it hasn't been in any kind of bull market. It's been up and then it goes down a lot, because a bear market is when you lose, 20% from the highs. If we measure this sell-off here as an example, this was minus 36%, and that is, bear market for sure. And this happened, between 2018. In 2018, all of a sudden we have a bear market in Brazil. If we measure this sell-off here as an example, all of a sudden you have minus 37% in Brazil. So the thing about the Brazilian stock market is that it is extremely tradable. So here you have a rally, all of a sudden you get 45%. Because there's a lot of people who are really stuck into the mentality that they want to just be into the SPY, the SPY. But the percentage moves aren't really here in the SPY. Mexico, it has been way better for traders than the S&P 500. Big moves up, also big moves down. We are currently seeing a bit of a move up here. So there's been substantial strength here in Brazil, certainly compared to some other markets. And that ties into a video I made earlier, where I talked about the possibility that Brazil will be viewed as a place where there's value due to the very low level we're at. And that is what we are seeing here in Brazil. So by being long Brazil while you were short some other markets, you could benefit in both directions. Looking here at the current rally in terms of overbought signals, we are actually not on the high end of RSI that is outright dangerous. Because if we look here on RSI, and let's draw that in with some arrows like this. So you see here, if we draw it in from here, this RSI level is dangerous. Boom, sell off, boom, sell off, boom, sell off. We are not really at that level yet. So that is, it's interesting. So there could be more fuel left in that, in this current rally. In regards to the PPOs, which measures the distance from the 20, 50, 100, and also of course the 200-day moving average, we're also not at these super high levels that have triggered imminent sell-offs in the past. So Brazil is interesting. This is a bit of a mature rally, but still based on the indicators, we don't have screaming red hot signals yet. Then let's go to Argentina. We do have, it's a bit noisy, frankly. It's noisy in the sense that when I look at the chart, it's not really that clear where one would put on a stop level, what is the reference point. The 50-day moving average, you see that the relationship price has to the 50-day moving average is very messy. It's noisy. It's not a clear resistance level. It's not really a clear support level either. It's the price slice and dice that moving average too much. So yeah, noise in Argentina. Let's take a trip to Sweden. EWD. So here in Sweden, we definitively have seen a very substantial sell-off. So let's actually look at, so we are below all the moving averages. That's bearish, but maybe it's so bearish that it's contrarian bullish. So when we look at RSI here, daily RSI, okay, let's do it like this. So we are so close to levels that are good risk-reward buying opportunities. So if you look at, zoom in a bit, so the previous time we had this RSI level was here, but that was just a bounce though. Here we got a bounce and then we went lower. Back here we had a low RSI level. This was a nice buy opportunity. What is a bit of a problem for Sweden in terms of using RSI is that a good time to use RSI where it creates a nice opportunity, that is when you have these kinds of situations. That's when price action does something like, let's draw that in. So when you have these kinds of sell-offs where we like go down, what is this? Okay, so like this. Okay, so when you have RSI make moves like this with a very sharp pointed pullback, well, let's draw it a bit more aesthetically, like this. So when RSI goes very sharply, so when RSI moves very sharply down, and then it ticks up a bit or hits like the low end of RSI, then you do have a bit of a clean trade. What is a bit of a messy situation we currently have now for Sweden is that occasionally RSI has done this, like it's been shuffling a bit sideways, and that is those situations where RSI is not sending you a good entry opportunity. You can very quickly lose a lot price-wise, even though RSI is technically at support. So yeah, it's a bit. Sweden is definitively here on the dailies on a very low level. Let's go to the weeklies just to check in terms of RSI. Yeah, RSI it's not it is at a level that occasionally does trigger reversals. But there's also been quite a few times where we have gone lower recently as well. So a bit noisy in Sweden. Yeah, then let's go to Germany, EWJ. So here we do have some bounce here from the weekly data points, the 100-week moving average. Yeah, but Germany does not have it doesn't have clean interaction with that moving average. So it is relevant, but it doesn't have like a high level of legitimacy. Because the more consistent the interaction between an indicator and the price is, the higher the probability that it will work out in the expected direction. Okay, so here we have a very substantial pullback as well, down to the low end of RSI. But you see that there's been so many times where it has gone a bit lower on the RSI. So RSI is not a clean level to use as like a signal to initiate a bullish position. Okay, so let's go a bit further down here. Let's go to Russia. So Russia. Okay, so Russia is very interesting because we have had this situation with Ukraine, which means that it could very well be that. So if that situation is resolved in a more peaceful manner, then Russia could be artificially undervalued because people have just been selling out of their Russian stocks. So obviously there's been a good reason to sell your Russian stocks. There's risk, but these kinds of temporary events can create opportunities for the longer term investor. Because the funny thing about the market is that it is very short term. So when there's a news event, the market reacts very quickly. But if you have a time preference that is a bit longer than the market, then you can have huge alpha. You can buy a stock that recently just got beat up and get a nice value play. With Russia, we could have something like that. I think it's an extremely low probability that Ukraine is going to create like a global military situation. Part of the reason is that America has actually encroached. Like if you look at the historical situation, right after World War II, the deal between Soviet and America was that no one was supposed to use the Europe, Western Europe, as like their territory. It was sort of like Europe was supposed to be Europe. But when you look at America, America has a very substantial military presence in Europe. They have done all kinds of stuff that was not part of that deal. Russia encroaching into Ukraine is also a violation of the deal made after World War II. But in terms of which country has most tentacles, like a squid, has put their tentacles into Europe, Russia or America, it's definitively America. So that context is very important to understand. So what Russia has done with Ukraine is nothing compared to the influence and military presence, America has in Europe, through NATO in particular. Yeah, so it's just something to think about historically. So yeah, so let's look here at RSI levels and stuff like that. So very low level there on the RSI. Looking at the PPOs, we also emerged from a very historically low level that could be interpreted as oversold and value in the realm of technical analysis. Yeah, I think this is interesting. If we zoom out a bit here, we are at a very much a repriced Russian stock market. Yeah, I mean, this is not like a roaringly bullish setup, but it's certainly not like a bearish setup either. I think that the bears have already repriced this stock market a lot. So in terms of having like a market neutral portfolio, in terms of your stock market exposure, it makes sense to have, to be more bullish on places where there's value, both technically speaking and also fundamentally, and also to potentially be short, markets that are overvalued. And America definitively still is, quite richly valued, while Russia, it's far better value. So it makes sense to be more like, look for bullish opportunities in Russia. Then we go to China. China, it saw some selling in this week as well. But when you look at China, the situation is even more interesting than what we have with Russia in terms of like long-term value. So let's draw that in here. So when we look here at the current at this level, okay, so let's draw it in a bit more horizontally. So the current level, it has support, back here, and there's a cluster of support here. Here it touches support quite surgically. Here you have that volume support, here as well, here. So this is a very interesting level. There are of course even better levels, like those who were able to buy here. They were able to get like very nice support levels historically, but that ship has sailed. But yeah, I mean, looking long term, am I bullish on China? Yes, I'm bullish on China. I think they're making a lot of good decisions that work out, long term. And the beauty of the stock market is that, especially if you do have a different time horizon, as I said before, it opens up opportunities. And even though it is fully possible for China to go even further down, this is at a historically very low level. So the probability of being able to buy now and exit at a later opportunity with a profit is high, given that it has been in this long-term price range. If you compare that to America, let's look at the Nasdaq as an example, because we have looked at the S&P 500. The Nasdaq is at a very high level, and like we don't have long-term support levels at all. If we lose these, I mean, we have lost a bunch of moving average support levels, and in terms of horizontal support levels, we have far fewer. But if you look at China on the FXI, like here we can go back, all the way back here to like 2015 and find support levels that are currently relevant, If you look here at 2015 here for America, like we don't see that at all. Like if we were to fall down here to like 2015 support in America, that would be like a minus 52% sell-off, and that is just to go down to a support level. So that is, it's just something to consider in terms of like value versus overvalued markets. Then let's look at India. INDA is the ticker. Yeah, so the first pattern that jumps right at me, of course, is this head and shoulders pattern. So let's draw that in. So let's draw it like this. So you have a left shoulder, a head, and a right shoulder. That is bearish. So when we have that pattern, then we have to ask ourselves whether head and shoulders patterns are very bearish for India or not. So then we have to zoom back and see whether we can find other head and shoulders patterns that are like similar. So in this case, we don't really have a head and shoulders pattern, but we have this this very clear, rounding top pattern instead, which is also it is similar-ish in logic to a head and shoulders pattern, but it just consists of more attempts by both the bulls and the bears to complete their ideal pattern. Back here we do have a rounding top, as you can see, so let's draw that in like that, rounding top pattern. So based on like the very quick analysis I did now, it seems like rounding tops are far more common in the Indian stock market than head and shoulders. But there's a big but. It could very well be that this pattern is going to develop into a rounding top pattern, because we now currently have this head and shoulders pattern and the shoulder. But if something like this happens, right, then we would have a rounding top pattern. But that is into the future. But yeah, so the situation for India, it's I wouldn't be shocked to see a rally, but the biggest question here is what is going to happen when we then meet resistance at the 200-day moving average, and especially here the blue 100-day moving average, because the bears they definitively used the 100-day moving average here to initiate short positions. Yeah, okay. So let's go a bit further down on the list, and then we take a trip to the Middle East. So let's look at Qatar, Q80 as the ticker. Yeah, so this is definitively a strength, and I also see some time cycles for sure. So how reliable have the time cycles been? So let's zoom a bit back. Especially here, you see the time cycles become very clean, very easy to trade. Based on those time cycles, we are towards the middle of the rising phase. So the expectation based on the time cycle is that we are going to see a decline heading into to the end of March 2022, the current year. And you see here that this stock market has a very strong tendency of just forming these tops and then going down. Here as well, top and then go down, top and then pull back. The previous times we have pulled back, we have found support at either the red 200-day moving average or the blue the red 200-day moving average or the blue 100-day moving average. So we are seeing some exhaustion here in the candlesticks. So let's see whether the overbought indicators have been reliable or not. So when we look here at the PPOs, so during this cycle high, we did have high RSI and also high levels on most of the PPOs. During this time cycle peak, then it was like perfect across the board. High RSI, high 20-day PPO, historically speaking, high 50-day PPO, 100-day and 200-day PPO. So these indicators have worked pretty well in the past. Also the MACD, you see that the previous times we have had these sell-offs and the sell signal on the MACD, it happened on very similar levels. So the odds definitively favor that this current setup here for Qatar it's not a bad place to consider some bearish opportunities based on that history. Then we go to South Africa, EZA. So on South Africa, yeah, it's very noisy. There's no really clear relationship between price and the current moving averages. The 200-day moving average has been sliced and diced a lot, at least recently, and when it is sliced and diced, then it loses legitimacy, both for the bulls and the bears, because you have bulls who try to use it as support and then they get burnt and then they don't want to use it again, naturally. And then you have bears who try to use the 200-day to go short and then they get into some trouble. So Yeah. So yeah, just very noisy here for South Africa. And then finally we have Australia, EWA. So here we have a very clear rounding top pattern, like this. Yeah, not the prettiest drawing, but it does the job. But this is a rounding top that is very mature. I mean, it's done a lot of damage already. The time to really go aggressively short Australia was obviously, that was actually back here in June of 2021. And you can see that the rounding tops have worked, decently well here also in the past, like here. So let's go even further back. Here we have like a monster rounding top that developed over a long period, like this. So definitively pretty substantial move. So we have now looked at a bunch of different markets, and there were some bullish opportunities, some bearish opportunities. These analyses were technical. In order to make a decision, it is very prudent to look at additional data, of course, looking at seasonality, correlations, looking at fundamentals, dividend yield, optionality, whether you can hedge or not, and get a bit fancy. So that is, of course, what you should do. So what you saw here was more like filtering, just looking for opportunities. And then once you have a selection of interesting setups, then you can then go ahead and pick the ones that have corroborating data. So if you look at one of those bearish setups that I found, if in addition, let's say the seasonality for the current month, or at least the coming month, is weak, then that is very interesting. That increases the probability that it will work out as a short. And of course the inverse for the bullish potential setups, like with Australia in the last example. To get full access to the educational material, you just go here. So there's 10 hours of content at the moment, and there's a bunch of stuff where I go in way more detail. And the content is growing continually, and so the value just goes up. So have a great week ahead, and be diversified and market neutral.